Speaking of result reactions, the market gave a thumbs up to Bajaj Auto second quarter performance as well. We've seen a pretty healthy set come through for Q2. Resilience coming in terms of the margin growth, largely aided by the move in the rupees as well, and the export volumes looking healthy, looking pretty healthy, good recovery over there. Let's put all of this in perspective and the way forward for the company. Mr. Rakesh Sharma, the Executive Director at Bajaj Auto, is with us. Mr. Sharma, thank you so much for joining in. Always a pleasure to have you with us. So it's the export markets are really fired up for you. The margin picture is looking very, very robust overall. But I want to start by getting a color on the domestic piece, because the first 2 quarters of this year have been very subdued for the domestic business. But now with the GST cuts and the festive season looking good, like you told us last time we spoke, what is your expectation and, what is your projection for H2 for the domestic two-wheeler business?
Good morning. Yes, the industry was sort of languishing in the April-August period. In motorcycles, it was a tad negative, -1%. And I must say the GST rate cut timed with the festive has catalyzed the industry back into growth. So we are looking at, give or take a few percentage points, but in the band of 6 to 8% growth. But in the coming quarters. However, the other story which is sort of hidden under those overall numbers is the quality of growth. What we have seen that in this 45-day festive period is that in each subsegment, the higher end variants and the better products, the better models have far outstripped the performance of the base models. So whether it's a 100cc, whether it's a 125cc, whether it's above that, we find that our N series, NS series, which are top of the line products, our KTM and Triumph models, they have grown very fast. So it's not just the quantum of growth getting corrected, but I think it is the quality of growth, which is now again reinforcing the up-trading trends which were there, but they've strengthened them further. So that's very good for us because, as you know, we focus on the top half in the 125cc plus. Yeah. And we are expecting, therefore, to harness this trend.
So that's good to hear. And when you say that in the second half, industry is going to grow at 6 to 8%, what does that imply for Bajaj Auto? I mean, how much better that industry, or would you be in line with the industry?
Well, our focus is the 125cc plus segment, and we hope to outpace the industry. We saw, a reversal of trends somewhat in the September-October period, where we have begun to claw back some market share. So going forward, basically in Q4, because the remaining parts of Q3 are going to be a little, will languish after the huge festive. But yes, come Q4, and we think that we should be expanding market share in our core strategic area of 125cc.
Can you give a sense of how much that expansion could be in your area of focus, which is 125cc plus? I mean, where is the market share right now? What percentage point gains do you think will happen looking at customer preferences?
Yeah, so in October, our assessment is that we have come in at about, I would say, from a registration point of view, we have come in at about 21%. We would be looking forward to adding to that. Now, that's a mix of, competitive reaction and how exactly the segment grows, etc. So the lineup for us and the momentum from September, October is suggesting that we should add to market share, but precisely how much, I'm also very keen to understand that, but I think that will reveal itself more by March or so.
All right. Hi, Mr. Sharma. The other, the strong point has been exports, and that's been seen a very, very healthy recovery. And what's heartening to see is now you're not dependent just on one geography. You've got it spread out a little bit. So a couple of questions out here. I think you clocked 2 lakh units. You expect to hold on to these sort of numbers on a monthly basis? Point number one. And point number two is in Nigeria, I think the festive season starts. So what kind of a run rate should we look at from Nigeria?
Well, yeah, we've reached the 2 lakh mark after, I think, about 40 months. So that was a very welcome outcome. We are hoping to maintain the growth tempo, which is between 15 to 20%. There is a little bit of seasonality, which is there where, after the festive, which generally in LATAM and all starts from Thanksgiving and extends up to New Year. So that is almost over from a shipment point of view. But I think we will continue our 2 lakh plus performance hopefully in November. And then we will see a slight dip. But I think the growth tempo will continue. Nigeria is in kind of an equilibrium where we are doing about, between 20 and 30,000 units. This is also season time for Nigeria, and we are hoping to really capture a disproportionate share of the growth. But Nigeria has not yet come back to, the 50, 60,000. In the past, when we have done 2 lakh plus, Nigeria would account for 50, 60,000. And currently, it is accounting for about 25,000. So you can imagine the kind of swing which has taken place in LATAM and parts of Southeast Asia, etc. So we will see how Nigeria goes, but it seems to be in an equilibrium in this 25 to 30,000 range. And but if their macroeconomics, if their currency is stable, that country is capable of much more. But we are going to take it month after month.
All right. A shorter conversation than usual, Mr. Sharma. Thank you very much for joining us. Really appreciate your time and best of luck as you continue to execute.